Matt. I'm one of our certified IRA specialists here at Quest, and I basically work pretty closely with our marketing team to help put on all of these webinars for you guys and to help our self-directed IRA education reach as many people as possible from pretty much all across the US. So we have a great class planned today. Today, we actually have Shenoah Grove here with us from the Texas RIAs, pretty much some of the largest RIAs that you'll see in all four of the major cities here in Texas. Shenoah and her husband Phil basically run those events, and they've got a really strong network of investors as well. So super excited to have Shenoah here with us today to give us an updated market update. But before we get into that, I do just have a couple of quick slides for you guys. I know with all of our webinars, we usually get a few new people joining us. Maybe it's been a while since you've attended some of our events. So just kind of want to walk you guys through a little bit about what we have going on right now, event updates, and how we can be of value to you out there. So quick little just background about Quest. We are a self-directed IRA custodian. We're based out of Houston, Texas, but we do have clients all across the nation. We hold about $2 billion in assets under management. And what's cool is all of that $2 billion is alternative privately held assets that our clients choose to hold in their IRA accounts, that they actually get to choose their own investments and what types of deals their IRAs invest in. So we are physically in Texas, but we do operate in all 50 states. And at Quest, we really pride ourselves on our fast funding times, our high level of customer service. And you'll notice that the education that we provide is of a very high standard as well. So we're always here to help. If you guys have questions, you know, we are the experts, so definitely don't hesitate to reach out to us. But very important here, I do have a quick disclaimer. Quest does not provide tax, legal, or investment advice. We provide a lot of educational webinars, such as this one, but please make sure that you are doing your own due diligence before you enter into investments. You know, our role is to allow you to self-direct your IRA and hold these different types of assets in your retirement account. But as far as the deal structuring and the due diligence, all of that fun stuff, you want to make sure that you are taking the time and the steps to do that properly, not just for your IRA investments, but for any investments that you might be doing out there. Now, self-directed IRA. The IRAs that we hold at Quest, there is actually no legal distinction between our IRAs and the IRA that you might currently have at Fidelity, E-Trade, Charles Schwab, any of those more traditional custodians. The IRAs legally are exactly the same, no matter where you hold the account, but the only difference is the types of assets that your custodian allows you to invest in. So to be completely honest, most of our clients have an IRA at a more traditional custodian. And then in addition to that, they also might have an IRA at Quest where they are self-directing the funds, you know, really, truly diversifying that retirement portfolio. And there's a lot of benefits to having funds in a self-directed IRA. One of the biggest ones is that you can invest into the things that you know best, and all of your investments that you hold in an IRA are completely tax sheltered from your own income taxes and capital gains taxes. So as you're going through and you're kind of creating your long-term plan, you want to make sure that having a self-directed retirement account is part of that plan in some form or way, because it's really going to help you avoid a lot of taxes on the growth from those real estate investments. Now, there are actually 7 different types of accounts that can be self-directed. We have classes that go through all of these 7 types of accounts in much more in depth. I really don't have time to get into it in my short 10 minutes to start this out today. But if you are interested in learning more about how you can potentially start self-directing your old 401k, maybe your health savings account, reach out to an IRA specialist. We can actually go through a free one-on-one consultation with you to really help you understand what types of accounts might work for you. You know, do you have a Roth IRA? Are you self-employed? Do you have children with educational expenses? We can kind of help to provide the full picture information for you and kind of help to point you in the right direction. So definitely don't hesitate to reach out to us. We are always here to help. And you know, like I was saying, these are just some of the many different investment options that you can actually hold in your retirement account. 98% of Americans out there only have their IRAs invested into publicly traded assets like stocks, CDs, mutual funds. But what most people don't know is that you can actually hold all of these assets in an IRA, and the profit that you make from these deals, it goes back into your IRA, and it essentially doesn't get taxed either until you take the money out at retirement, or if you're doing your investments in a Roth IRA, you could potentially never pay any taxes on the growth in that account. So lots of value here. If you're doing these types of investments outside of your IRA, you can apply those exact same strategies to your retirement account and really help to grow that nest egg from money that might just be sitting there that maybe might not be doing much right now. Now, that's kind of my quick commercial about Quest. I do actually have a lot of great events also coming up. Well, not just me, but our entire team does. Quest provides a lot of free education. We have an awesome YouTube channel. I do have a moderator online with me today that Katie will be sending some links to these different resources for you guys. So I would definitely encourage you to check those out. But we have weekly webinars. All of our classes can be rewatched on our YouTube page. So that is a fantastic resource there. And we also have actually a 3-hour CE course coming up next Thursday on February 18th. If you are a real estate agent in the state of Texas, this is a free 3-hour class. It's an extended, all you need to know basics, how to invest with a self directed IRA. But this course is also cool because it kind of gives you the angle of how to use a knowledge of self directed IRAs to grow your business as a real estate agent. So anyone can join this class, scan the QR code. You can register through there or through our website. And last but not least, my personal favorite event that we have on this slide here is our virtual networking happy hours. So this is a really fun event. I actually host it myself on the first and third Wednesday of every month. And unlike our webinars, the virtual happy hour is actually set up as a Zoom meeting. So everyone gets a chance to share their cameras, everyone gets a chance to give a quick elevator pitch and introduce themselves. And these events have really taken off. They've had really high quality people joining every single month. And we've had anywhere from 50 to 70 investors attend every single happy hour. So it's a great place to meet investors and start conversations with people that you can hopefully just continue to expand your network, even though we may not have quite as many in-person events right now. Now, the last event that I want to touch on today is Questcon Live Private Lending Edition. So this is our online self-directed IRA conference that we host. This will actually be our third edition of Questcon Live, and very similar to the other Questcons that we've hosted. It'll have over 20 guest speakers over the course of 2 days. And since this is a bit of a larger scale event, we typically get a couple hundred people at these. We have a virtual happy hour exclusively for QuestCon attendees. And there's a lot that goes into booking these high level speakers for everyone. So this is a paid event, but tickets are in pre-sale right now through Monday, March 15th. So be sure to get your ticket. You can also get the recording as well. And if you have more questions about QuestCon, be sure to check out our website. We have a lot more information there. And we should be announcing our speakers as well in the next upcoming weeks. So be sure to stay tuned for that. Now, like I've said a couple of times already, we are very easy to get a hold of. One thing that we really pride ourselves on at Quest is our ability to really make connections with our clients, build a relationship with you guys. A lot of our IRA specialists are also real estate investors ourselves, including myself. So we understand how this works. We understand where the priorities are, and we can really help to fill in the gaps of basically how self-directed IRAs work and fall into these scenarios. Whether you're looking to invest your own IRA or if you're looking to raise capital from other people's IRAs, reach out to us. Start a relationship with one of our IRA specialists. We can be a great resource for both you and the investors that you work with. And on top of that, we have a special little promotion going on this month. We are giving back through our Quest Cares promotion. So anyone who establishes an account, we will be donating money to charities on your behalf. And if you are a current Quest client and you know someone who may need an account, be sure to let them know that we have a referral program. This year, we have newly revamped this. When you refer someone to Quest, you will get a $25 credit to your account, and they will also receive a $25 credit as well. So again, you can find more information about that on our website, or just give us a call, send us an email. We are more than happy to help explain anything that you might have questions about. And that's all I've got for my quick little intro. Without further ado, I want to go ahead and pass it off to Shenoah, joining us today from actually very cold Austin, Texas. Shenoah, I always love to hear your market updates. You've got some great insight. So go ahead and get away, and I'll come back on at the end, and we'll do some Q&A. Oh, and you're muted. We can't hear you.
Awesome, guys. Well, thank you so much for having me, and so good to see all of you guys, at least some of you guys. And so happy to be here and to be part of the presentation today. I want to see some of the other gallery members here and just see if anybody else has their cameras on. And just want to kind of give you guys a big wave and a big shout out. I want to also just figure out where you all are from. What are the markets that you guys are in? What are the markets you guys are investing in? For me, I live, work, and invest in Texas. So love to share information about what's happening here in the Texas market, which is what my presentation is going to be mostly focused on. It looks like we do have some people who are from Wisconsin and maybe some other states across the United States, and maybe even some places around the world. So one of the things about Quest is that even though they're a homegrown Texas company, they have clients all over the United States, but they also have clients throughout the world. So it's a great group to be part of, a great group to be experiencing real estate and real estate investing in. With Quest, yes, you can invest in what you know best, which for me personally, that's real estate. And for me, I've been investing in real estate since 2003. That's when I started started my ultimate transition to be full-time, which I went completely full-time in 2004. But I come from a long line, a long generation of real estate investors here in Texas. So I'm actually a fourth generation real estate investor here in Texas. My great-grandparents invested, my grandparents invested. My parents still own about 12 doors to this day of different properties that they own and manage. And the first property I actually bought as an investment property, still in our family today, was one that I bought as a college student in the 90s. When my mom said, "Hey, we are not a family of renters, we're a family of owners, and we want to get you a place as you're getting started so that you can not be paying rent, so you can be ultimately building something." That first investment back then came in at $105,000. That was a purchase price of that investment. Today, that property is worth well over $1 million. In fact, one of the members of our association, the Real Estate Investor Association, recently tore down and rebuilt a house almost right next door to it and sold it for well over $1 million. So that's one of the beautiful things about investing in real estate. You get to watch these properties grow up. You get to watch these properties increase in value over time and be part of that as well. So some of you guys might be thinking, well, how does a college kid buy their own property? You know, must have been mommy and daddy's money, is I think what a lot of people have said to me. And the truth is that it was not mommy and daddy's money as much as it was just using different strategies that were available to us at the time. So when I first bought that property, it was during a time when the types of loans that were out there were what we call non-qualifying assumable loans. So that's how a college kid making minimum wage with no real credit and no real down payment gets to buy a house, right? Just taking over payments. Now, today they don't make those non-qualifying assumable mortgages anymore, but you can still buy properties using what we call the subject to the existing financing method, which is how we do that same strategy today. And that's how we help other investors as they're getting started and maybe coming from a position where they have not a whole lot of money, or maybe enough money to do a deal or two, but not really enough money to ultimately scale their business. So we teach different strategies as part of the Real Estate Investor Association about how you can leverage other people's funds and ultimately be able to scale your business. Now, what we love about working with our friends over at Quest is the fact that the members of Quest and the company that Quest has over $2 billion under management. And of that, as Haley was saying, about 300, and let me just look at the notes again, about 350 million goes undirected every single night. So one of the folks that was on the call asked, well, what does that mean? Edward said, and I answered that, a lot of the money that Quest has is already invested in different assets, whether they're promissory notes, single family rental properties, multifamily properties, notes, loans. So there's so much to be able to invest with and do as a real estate investor and with your self-directed IRAs. So with the folks over at Quest, what we love about working with them is that the principals of the company are real estate investors themselves. So everything that they look at has that flavor of being a real estate investor. And they can do all of these different creative transactions that we do personally, both in and out of our IRA. Obviously, in your self-directed IRA, the folks over at Quest are the absolute experts in combining that IRS tax code about self-directed IRAs, along with a long history of real estate knowledge and that other information, of course, the network that makes it so very powerful. So what we love about being part of this is that there's just so much ability to do more transactions as you are part of a group, as you are part of an association, or even part of a company like Quest. Because what I've seen is that if you want to go fast, go alone, right? Good luck. You're going to make some mistakes along the way. But if you want to go far, go with others, go with people who have been doing what you're looking to do for a long period of time. So thank you. A big thank you to Quest for providing this platform for all of us investors to network, get together, share tribal knowledge, and share best practices. And guys, I'm going to go ahead and pull up my screen just so you can see a little bit about what we'll talk about today. So I want to make sure I got the right presentation up here, because I got a couple of them in my notes here. But I'll tell you guys that as I've been investing since 2003, gosh, this is the best real estate market that I've ever seen by far. And this is a result 100% of the disruption that we are all living through, not just in Texas, not just in the United States, but throughout the world, right? So this disruption has caused an incredible amount of opportunity. And obviously we're in a very fluid and dynamic situation. So I think a lot of us have gotten our sea legs, or our pandemic legs, if you will, over the course of the last 10 to 12 months, and really just kind of getting used to what it is like to be a real estate investor in these times. And what I will tell you is, just like with any disruption, incredible opportunities arise from disruptions, including this one. And there's an old saying, never let a good crisis go to waste. And for us, as part of our real estate investing group and as part of the RIA, that's what Real Estate Investor Association stands for, RIA. That's an acronym for that. We want to make sure and help people understand all the different things that they can do in their personal real estate investing, so that they can be successful in this very fluid and this very dynamic market that we're all in right now. So I'll share with you some of the different strategies that we have used to make those slight little adjustments in our business and pivot our business, so that we can not just survive, but also thrive as real estate investors. And I'd also like you guys to invite you guys, if you're interested, to join us, join our association. That's where you get to meet several other different real estate investors, be part of something that is bigger than yourself, and be able to leverage the knowledge within the network, the association, and all of the experience, and be able to have someone to share and trade best practices with. So if you're interested in learning more, Beyond what we'll talk about today as part of the market update, I'll just invite you guys to spend some time with us. We do a live presentation every single Tuesday and Thursday at 6:30 p.m. We've got several different areas that we broadcast from. So we have our podcast, we have our YouTube channel, we have our Instagram account, we have our websites. We do it also on Facebook Live, but we do it every Tuesday and Thursday at 6:30 p.m. So the next one actually is tomorrow, or pardon me, tonight, Thursday night at 6:30. And if you'd like to get registered for that and a lot of other great stuff that we'd like to be able to share with you guys to help you on your investing journey, just head over to texasstarterkit.com. And if you want to just notate at the end of that Quest, then you can head over to texasstarterkit.com // Quest. And that way people will know that you're coming from the Quest presentation as well. And that way we can give you a couple little special bonuses here and there. So love to be able to share that with you. As part of what we do every single week in our meeting is we share the market update. We also share what we call a real estate investing tip of the week. So we've got hundreds and hundreds of tips that we've learned from our own real estate investing, and obviously sharing best practices with the other members of the association. So love to be able to share that with you, as well as the multiple different strategies that we use as real estate investors to survive and thrive no matter what the market gives us. So I will tell you, when it comes to real estate here in Texas, the sky is not falling. Specifically here in Texas, it's been very much a V-shaped recovery. So if we're going back to March of 2020, when the world started to change a little bit and go a little bit into what I call the upside down mode, in our March sales, they were actually up, even though for Texas, for example, we were shut down about half of the month. Our April sales and May sales were down 19 and 23% respectively. But in June, July, the whole rest of the year, sales started to jump up at a very fast pace. And as a result, we had an incredible year in 2020 that way surpassed the results that we had in 2019. And so far, the early January results that we're getting in, January sales are all up. So I'll be sharing some of that data with you guys as we go through the presentation as well. So excited to be able to share that with you, and also talk about the opportunities that exist for both investing in Texas and just investing around the country. So let's just kick it off by starting off with what's different about this market cycle versus where we were in 2008. Well, the big thing here in Texas was in 2008, we had about a 9-month supply of inventory, which means that we were oversupplied. So our typical months of inventory is somewhere between 6 and 6.5 months of inventory here in Texas. That's our 40-year average. That's what we call our market equilibrium. So when you have above 6 months of inventory, they call that a buyer's market. So that's when sellers are usually selling for, their prices are either flat or maybe even starting to go down. So we're very much in a buyer's market in 2008 with about 50% more inventory than our historical average. And versus today, we actually have less than 3 months of inventory, and in some markets, significantly less than 3 months of inventory. So that means we're in an inventory shortage. So anything less than 6 months of inventory is a seller's market. So right now, we have less than 50% of the average, which means we're a seller's market on steroids, if you will. So what does that mean? Let me just kind of break down that concept of months of inventory. So what that uses is the formula is you look at how many properties have sold, for example, in the last 6 months, and you divide that total number of sales by 6. And then you get the average number of properties that are selling every single month. And then after that, you'll take your active and pending properties. So how many properties are currently available? And then you divide that by the number of properties that are selling per month, which you got in the first part of that equation. So if, for example, you have 18 properties that have sold in the last 6 months, then that 18 divided by 6 means on average 3 houses are selling every single month. If right now you're in a situation where you have 30 properties on the market, that 30 properties divided by 3 months means you have a 10-month supply of inventory. On the other hand, if you have more like what we have today, 6 properties on the market and 3 are selling every single month, then that means you only have a 2-month supply of inventory, which is a lot closer for what we are seeing today. Now that's great, but what does that mean? So let's dig a little bit further in. So that is your total liability as a real estate investor for your holding time. So a lot of people look at the classification of days on market, right? So days on market, that represents the amount of time it takes to go under contract, not to sell, but to go under contract. But that's only for the lucky ones that actually make it to the finish line and close, right? So if you are trying to figure out what is your total liability as a real estate investor when it comes to your holding time, right? Because your holding time ultimately affects how much profit that you make as a real estate investor. So your holding time is affected, not just looking at days on market, but also months of inventory. So best case scenario, you sell your property in the amount of time that stays on market. Worst case scenario, you sell your property at your months of inventory. So even though properties might be selling right now, for example, in 30 days, if the months of inventory in your area is 3 months of inventory, then you need to look at what life looks like and what your P&L looks like after, if in the event you hold it for those 3 months. So in a market like what we're in right now, not that big of a deal, but in the markets that we've been in the past, right, it's something that you really need to watch and look at in every case just to make sure you're making the right choice. So that's the big difference, again, in terms of inventory, where we are today versus where we were in 2008. Right now, sellers are not listing. In fact, they've removed many of their listings. In fact, in some parts of the state, we have 50% fewer listings than what we had at the same time last year, versus back in 2008, going through the last market cycle, we saw that sellers were flooding the market, adding listings. Why were they doing that? Well, because in many cases, they had balloon mortgages. In many cases, they had adjustable rate mortgages. We don't have those today, right? But so that's one of the reasons why we don't have as much inventory, because people were not buying as speculatively as they were back in 2008. But the other thing is, and imagine, and you'll probably hear some noise and background noise at my house. We're all working at home now, right? So my husband's downstairs on a Zoom call himself. In fact, my son just walked in the door because they let school out early because of the winter weather conditions. But sometimes he has to do school remote learning. So everyone's at home. And can you imagine a realtor calling you up as they're standing in your driveway saying, "Hey, we want to show your house right now. Can you let us in?" It's like, well, I'm going to call. My husband's on a call. My son's taking a quiz in the other room. The dog's running around, the house is a mess, and I don't know where you, the agent, has been, and I don't know where your buyers have been. And typically what we see when life is a little uncertain, like the way it is right now when we're in this upside down market, typically people start to kind of come inside and start to not take action. So they don't want to put themselves out there and expose themselves, put themselves at risk. So when that uncertainty comes in, people are not anxious to move. In fact, they're anxious to stay put and just kind of see what happens. And in a lot of cases too, we've seen so many of these homeowners and just simply go and refinance their houses. I don't know about you guys, but over the last year, my home has become my sanctuary, and I'm just trying to make my sanctuary better. So how you make your sanctuary better? Number one, a lot of people are refinancing their properties at these incredibly low interest rates. And number two, people are doing either additions or remodeling or just little home improvement projects throughout the house. So that's one of the reasons why sellers are not selling. But in this case, in in 2021, our buyers are buying like crazy, again, because of the incentive based on those low interest rates at about 3%, versus in 2008, buyers were not buying, not so much because the interest rates were twice what they are right now, because it's all relative to what was going on at the time. A 6% interest rate was very normal in 2008, but mainly because banks were not doing their jobs, right? Their job is to lend. They basically stopped, halted all lending in that 2008, 2009, 2010 timeframe. And as a result, in 2008, for example, and through 2010, prices were flat or down, at least in Texas. I do recognize that other markets throughout the country, prices were down significantly and sales were down significantly. But today, in today's market, banks are doing their jobs, which is lending. So they're all able to provide the glue that brings us all back together as real estate investors, as people who want to buy and sell. And as a result of all of these different things, market shortage, basic economics, right? Seller demand is up, seller demand is gone, seller inventory has gone down, buyer demand has gone up. So you see those average prices increasing, and we're seeing that in spades right now. And I want to go and share with you what that looks like by some of the major markets throughout Texas. So this is my focus, Texas. So I live here, work here, invest here. So Texas is about the 8th largest GDP of any country in the nation. Even though Texas is not its own country, it contributes a lot to the GDP of the greater United States, and is one of the top producing countries in the nation. We have so many people moving here. In fact, I've got the book Upside behind me. Some of you guys can see that back there. It talks about all the people that are moving to this Texas market and talks about what that trend's going to look like going forward. So live here, work here, invest here, invest in the major markets throughout Texas, and very familiar with what's going on throughout Texas. So, and a lot of the data that I'm going to share with you today doesn't just look at Texas, but really looks at, you can also compare it to most of the other markets around the country. But again, the focus for the presentation today is going to be on that Texas market. So I'm going to break down the numbers for you guys for both last month as well as the full year for 2020, and talk a little bit about the forecast for 2021. So last month in Texas, the sales prices were up to $339,000, up 13% year over year. And the median price was up 9% to $270,000. Total number of closed sales last month in Texas up 22% year over year. So the 2021 forecast, if we continue at this pace, which we've got our pending sales up right now at 27%, if we continue at this pace, then 2021 is absolutely going to blow out 2020, which absolutely blew out 2019. But the issue that might stop us, or at least slow us down a little bit beyond what we could be doing, is the fact that our months of inventory is so tight right now. Again, in all of Texas, we have less than a 1.7 month supply of inventory. And in some areas, it's even less than that. Obviously, some areas more, but 1.7 months of inventory overall is an incredibly fast moving, fast paced, brisk market. Why is that? Because people are moving here, and I'll reference this. I kind of pulled it out a second ago. I'll do a stop on the share, but I referenced this book here. It's called Upside. It's written by Kenneth Gronbach, Upside by Kenneth Gronbach. And you can see all the different Post-it notes that I've made in this book myself about where the market is going and where the market is growing. So I use this as my little bit of investment Bible in terms of understanding not just what's happening here in Texas, but also understanding the greater economy overall. And I'll kind of sum it up for you all, and that is that people are moving to Texas. People are also moving to Florida, and California is also another state where there's a lot of demand. But The folks that are moving to Florida are mainly retirees versus the people who are moving to Texas are still in what we call their childbearing years. So right now, even though Texas and Florida are pretty close to the same in terms of overall growth, at some point in the next 10 to 20 years, we're going to see Texas significantly pass Florida in growth, just from the standpoint of the people who are moving here are still in their childbearing years. So still having babies. And of course, for those of you guys who are here in Texas, you know how many people are moving here from California all the time. So that is a phenomenon that we expect to continue to see. Now, one of the quotes that I highlighted in here, and probably my favorite quote that I highlighted in here, is this one I'll share with you. So they're talking specifically about New Hampshire and many of the eastern states as well. And they said in New Hampshire, for example, they pay state taxes that are high above the national average. And the report noted that they were they said this: high taxes don't redistribute income, high taxes redistribute people. So what do we know about here, what we have here in Texas? In Texas, we have a very low, we have no state income tax, but we do have a property tax. And the property tax is higher than many of the other places around Texas, but it still is enough of a discount, if you will, not having the state income tax and just having that higher property tax to, again, pull people here to the state of Texas. And you're seeing major announcements of many companies being relocated here as well. So that's going to continue to feed the supply of people that are moving here, and it's going to continue to put us in a position where we have very low months of inventory, at least in the short term. And by short term, I mean, and I never, even before this very upside down market, I would never forecast past about a year in advance, but there's no way for us to increase the amount of inventory we have. It will in the short term. So an inventory increase will take us anywhere from 18 months to 3 to 5 years. And that's if we really get on it today, because to create some of these developments, that in some cases those take 12 to 36 months, even just to get some of those first houses going, just because of the infrastructure that's required and overall steps that need to be taken. So what does that mean? So if we're going to be in this very low months of inventory for an extended period of time, and if people continue to move to Texas, that means pending sales are going to continue to go up, closed sales are going to continue to go up, average price is going to continue to go up, days on market is going to continue to go down, and our total active listings are going to continue to go down. So right now, our active listings are down 41% in Texas year over year. In some markets, for example, like the DFW market, active listings are down roughly 50% year over year. So we expect this trend, all of these trends that you're seeing on this page right now, to continue throughout the rest of 2021 and probably into 2022 as well. If you want to look back at the 2020 full year sales data, for all of Texas, total year-to-date sales were up 9.4% versus where we were last year. And the average price was up 8.2% versus where we were last year. And if, again, some of these trends continue, it will be even higher for 2021, because remember, for at least 3 months in 2020 here in Texas, we were completely shut down. Now, thank goodness they did say that real estate, both investing and selling, was an essential service. So we got to very quickly, we were able to keep the ball rolling, but we were able to very quickly rebound as well. So guys, I'm going to go ahead and head over to the Austin market. We'll do the same detailed analysis of the Austin markets as well as Dallas and Fort Worth too. So for the Austin market, Gosh, this is probably one of the most interesting markets that we have, really from the standpoint of some of the wild phenomena that we have never seen, except what we've seen in 2020, and it's continuing in 2021. So I'll highlight what that is. But let's get the big stats out of the way. So the sales price was up 21% last month for the average and up 15% last month for the median. The closed sales in Austin were up 16% year over year, and pending sales as we ended last month were actually up 40% year over year. And guys, these are not typos, but these are some wild numbers that you're seeing. And days on market is almost less than a month, and the wildest thing I've ever seen. And again, this is not a typo. Historically, months of inventory have been about 6 months of inventory here in Austin. And over the last several months, it's been going, it was already last year at about 3 months of inventory, but over the last 9 months, it has been sinking and sinking and sinking to right now its lowest level that we have ever seen in the history of tracking here in Austin, or any market here in the Texas area, or probably even any of the markets throughout the country as well. But right now we are at a 0.6 month supply of inventory. That means we don't even have a full half month supply of inventory of homes for sale. So again, I just want to make sure you guys get the months of inventory concept. When you have a 6 month supply of inventory, that means that if you stopped listing houses today, based on the current buyer demand that we've had over the last 6 months, as an example, it would take us 6 months to be out of an inventory of homes for sale. Here in Austin, if we stopped listing houses today, it would take us less than 1 month to be completely out of an inventory of homes for sale, based on, again, these closed and pending sales number, and based on the total active listings. So the total active listings right now in the Austin area down 63% year over year. So the phenomena that is so wild that I want to point out to you all is the fact that our total active listings, just under 2,000, is actually less than our total pending sales. This is an unheard of phenomenon. So I'm going to go back to show you the Texas data. So Texas data, pending sales 26,000, active listings almost or about double that, right? That's closer to normal. It's not normal. It's still significantly higher pending sales, significantly lower active sales. But to see those numbers reversed, right, to see active listings actually less than pending listings, that is a phenomenon that we've seen for about the last 4 or 5 months, but we have never previously in the history of Austin or history of Texas ever seen a number like that. So that's one of the big things that we're seeing too. Year-to-date sales in Austin up 8.4% versus last year. Year-to-date average price up 11.3% versus last year. So I want to point that out as well. For the Houston market, this market, a hurricane doesn't stop it. Oil and gas price per barrel trading in the negatives doesn't stop it. This is an unstoppable, just incredibly strong and really more and more diversified as through every market correction when it comes to oil and gas. Houston just gets more diversified to be resilient, so much more resilient today than, for example, it was 10 years ago, 20 years ago, and especially 30 years ago. So sales price was up in Houston last month 11.4% to $347,000. That median price was up 9%. Closed sales last month up 27% in Houston. Pending sales up 40.5%. Our days on market in Houston properties are selling in 47 days, and our total active listings are down 29% year over year. For the full year sales data last year, Houston sold 10.5% more than what they sold last year, and the average price was up 6% versus where it was last year. Again, Houston's a little different market than, for example, Austin, Dallas, and San Antonio. Houston is its sort of own beast from an oil and gas standpoint. than those other markets, but has been doing incredibly well in spite of multiple challenges that tend to kind of get put in Houston's path year after year, but Houston consistently overcomes those challenges as well. So it's a fantastic place to both live, work, and invest. Lots of stuff going on there. And the San Antonio market, so I want to break this one down too. Here's what's fascinating about San Antonio. The average price, $312,000, up almost 20% year over year. So what's gone on in 2020 in San Antonio? So it used to be the average price when I first started investing in San Antonio was about $200,000. Right now, and since 2020, it has been hitting over that $300,000 mark for the last several months. So that's the new normal in San Antonio, where San Antonio previously was, 200 to 250. And 250 was still kind of a high number for San Antonio. And now it's consistently over that 300,000 mark, which is a big jump for that market and a big just sort of demonstration of the potential growth that's available there. San Antonio is one of the most affordable major markets here in Texas, right next to Fort Worth. So when we talk about the Dallas and Fort Worth, we'll kind of combine those two cities to create that Dallas-Fort Worth metroplex. But San Antonio is one of the most affordable major cities, again, right next to Fort Worth, but it's becoming slightly less affordable every single month. Now, that doesn't mean it's not affordable, still less than the US average and median as a whole, but very quickly catching up with that. Closed sales in San Antonio last month up 27%, pending sales up 15%, days on market have dropped to 49 days, active listings right now in San Antonio down 29% year over year. Last year for the full year sales data, the year-to-date sales were up 10% year over year. So again, another unstoppable market when it comes to that type of data. And I want to go ahead and get ready to share with you as well the Dallas data. So I'm just want to make sure that we've got all of this up and going. So right now, the Dallas data is also very strong. And they do say that as Dallas goes, so does the rest of the market. So let me just pull up that Dallas slide for you guys right now as well. All right. So the sales price in Dallas was up 12% last year or last month, median price up 10%, pending sales up 7%, closed sales were up 14% year over year last month in Dallas, days on market a very quick 39 days, active listings in Dallas down 50%. But even though they're down 50%, they're still more than 2x, right? The total number of pending listings. So again, that no one has that phenomenon right now that Austin has, but it's again, one of the wildest things that I've seen in the market ever since I started investing and even watching the market and even going back historically in the data. For the full year sales data in Dallas, year-to-date sales up 9.1% year over year, and that median price up 6.8% year over year. So guys, I'll take some questions from you all about either the Texas market and or the greater US market. So the greater US market is very similar in terms of how the Texas market is performing. The Texas market is outperforming the US market overall in terms of increase in total sales and in terms of increase in average and median price. But the overall US market is still very strong. So while I'm waiting for some questions, if you guys have any, we do tips of the week every time we get together as real estate investors. So want to make sure you guys are aware of some of those different tips. So today's tip that I'll go through is something we call the Memorandum of Contract. So I don't see y'all's faces in the gallery right now. I just see some of the fellow panelists, but I just want to see if you guys have Any questions or have heard of that memorandum of contract? So that's something that we use whenever we put a property under contract, specifically when we're dealing with a motivated seller. We always use something we call a memorandum of contract. So what is that? The TREC contract, as it's currently written, is a contract that does not have an area for a notarization stamp. So it's an unnotarized document. If it's not notarized, then that means what can you not do with it? Who has the answer to that? What can you not do if it's not notarized? Well, you can't file it in the public records because anything in the public records has to be notarized. But what we do is we slap a one-page, what we call a memorandum of contract document on it, where we get that notarized so that we can then file that contract. What does that give us the ability to do? Guys, you have any comments or know the answers to any of this? So if we're filing it at the county, let me explain to you guys what that means. That means in the event that the seller gets what we typically call seller amnesia. What's seller amnesia? Seller amnesia is when the seller sells to you, for example, for $200,000, and then someone comes and talks to them 5 minutes later, 5 days later, and says, "Hey, I'll pay you $5,000 more." Seller amnesia, okay, this is a technical term, some type of a cognitive bias that goes on, where the seller thinks and is right in their own mind. The seller thinks, well, of course, since I got a higher contract, since I got a higher offer amount, then, well, of course, I'm going to sell it to the person who gave me the higher amount, and I'm going to sign a new contract with them, regardless of the fact that I've already agreed to sell it to investor A. So what happens is if you have this memorandum of contract in the record, in the public record, when that seller and that new buyer go to close at a title company is going to find that document, and they're going to tell the seller, "Hey, who's this Shenoah Grove lady? Would you mind reaching out to her and asking her for a release of this memorandum of contract, or kind of telling us what's going on here?" So in fact, I see Rick Bressler says, "Great tip topic. I use the memorandum of contract myself and it saved several deals from falling apart." Right. And it is something, Rick, I kind of have lovingly referred to it as seller amnesia, right? Whereas seller logic, where they say, "Oh, well, since I've got a new offer that's higher, I'm going to sell it to that other person." Even though the contract, you can't really do that, right? So that helps us enforce the contract that we have. And typically when a seller is in a position where they are trying to sell to somebody else and they have to now call me to release that memorandum of contract with the title company, what do I say? I say, "Well, I'm happy to release that memorandum of contract for a small fee," right? Or if I want to fight for it, which I legally can because I have this property under contract, I can fight for it and get that other investor to step aside. Now, it will be a fight, to be sure, even though you have it under contract, even though the seller was not supposed to do that. Does that happen all the time? And the answer is yes. So I want to make sure you guys are aware of that too. And that's one of the reasons why we use this as one of the tips that we share with the members of the association so that they know how to protect their eggs, count their eggs in their basket before they hatch. And that's one way certainly to do that, using that memorandum of contract. So if you like that tip, I'd invite you to join us at any of our Real Estate Investor Association meetings. How can you do that? You can head on over to texasstarterkit.com. And if you notate Quest, we'll just kind of know a little bit more about you and where you come from. We'll also help you work on your personalized blueprint. And we'd love to have you guys not just join us for the Real Estate Investor Association, but also join us for some of the additional training that we do as part of the Investor Association. So we actually have a live 3-day training coming up on February 19th, 20th, and 21st. That's a Friday, Saturday, and Sunday. We go from 9 a.m. until about 7 p.m. or later. We keep talking keep answering questions until you guys are done asking questions about our almost 2 decades worth of investing experience. We do it live and online on Zoom, kind of like we are now, and we make it super interactive. So what does that mean? So we take your live questions questions, we unmute you, and we really get that conversation going, which is one of the cool things we get to do. But during that meeting, we'll talk about some of the 12 different strategies that we use to buy and sell properties, control properties. We also talk about the marketing campaigns that you need to put into place to be able to find these off-market deals. We talk about the closing scripts, what we call the exactly what to say for the real estate investor. And I'm just reaching behind me really quickly because I just want to share with you some of our favorite books that we use as real estate investors. Never Split the Difference, Exactly What to Say for the real estate agent. So we built our script using some of these negotiation tactics that we've learned from several of these authors that I personally got to spend a lot of time with as we were building this. And of course, our 1,200 deals worth of experience of talking to homeowners that had to do something to sell their house and how to overcome those objections. So we'll talk about that. We'll also talk about partnering with other local experts if you're looking to invest in the Texas area and accessing different sources of funding. Obviously, that's one of the reasons why we love to have Quest at all of our meetings, because of their we lovingly refer to Haley and Juan and some of the other IRA specialists as our $2 billion man or our $2 billion woman, because again, Quest has that $2 billion under management that so many people use to invest in the things that they know best, which for us here is real estate. So if you would like to join us for some additional live training, just head on over to texasstarterkit.com. And so I'll type it in, and big thank you to Haley as well for typing it in for me. And then if you head on over to the /Quest, again, we'll just know that you came from the Quest meeting. And I see one question here. So from Ron B. Ron says, I'm currently evaluating private lending IRA investment deal in the Galveston area, looking to work with someone who knows value and market data really well in that area. So there are a lot of people, so I want to make sure not to hurt anybody's feelings. Haley, is it okay if I give some? Okay, good. Yeah. So I'll go ahead and type in Murad Fiki. He is a realtor, and he knows the Houston area and including the Galveston area. Like very few people that I've seen. And Haley, you know Murad too, right?
Oh, yeah. You love his energy.
I love his energy. He sold multiple houses for me and many houses for many of my colleagues. Please do me the favor and let him know that I sent you over. I don't want anything from him or anything like that, but I just want to share the love, just let him know how much I appreciate him and all the different things that he's done for me. I have several on. I hope none of my other Houston realtors are on the call. Don't get upset with me. I'm just kind of going one that's just off the top of my head because I feel like Murad is everywhere, and he's a great resource in that Houston area and that Galveston area. Mm-hmm. And of course, has access to be able to list those properties there. He's one of the top performing agents in the Keller Williams office that he works, and just a fireball and is really great at even selling unsellable houses. And what you will love about him too is he gives he doesn't care if he offends you in terms of like being real with you and sharing those values with you. He just wants to make sure you make the right move. So someone who I've trusted with my personal property, someone who I could definitely recommend. Again, there are so many wonderful agents that are part of our investor association. So if you need any others, just also let me know. And again, just a big thank you to Haley, to Juan and Juan. As I know, we got two Juans on the call today. Thank you guys for hosting me. And if you all have any questions about anything investing or anything investing Texas, again, we always say about our investor association, Texans teaching Texans how to invest in Texas using strategies that actually work here in Texas. So we live here, we work here, we invest here. here. We are deep in Texas, and love to be able to help any of you guys who are looking for just that kind of that Texas touch, if you will, right? That depth of knowledge here. And yeah, I don't see any other questions. Haley, I don't know if you guys have any questions or anything that you want to share. Thank you, Rick, for the compliment. I appreciate it. Quest has been so kind to have me speak and give market updates many times over the years, including one of the last times, my favorite times, when we had about 700 people at the live Quest Expo event. Can't wait to get back to that. But love to meet you guys all in person. And until then, just see you on our weekly market updates, where we share both tribal knowledge, investor tips, different ways to buy and sell houses, market forecasts, and really how to transition from maybe a W-2 job to investing full time. And of course, with the help of the folks over at Quest, being able to do that in your self-directed IRAs, to really have some control over real estate and your retirement income. I know as I watched the stock market go like this over the last year, and I watched my real estate portfolio just go like this over the course of the last year. So everyone's investment, I'm assuming, in Quest was probably performed really strongly without the need for a defibrillator, bump up, which is what you felt like you needed if you were in the stock market. Quest is a great place to be able to invest your retirement assets, and you're investing with people who really care. I always joke that, and it's not a joke, it's for serious. If I ever had to go to work for anyone else, and I have not worked for anyone else since 2004, but if I ever did, I would go and work for Quest, because it is world-class service, and really just enjoy working with them and their knowledge and just their philosophy and their commitment to the community. So a big thank you so much, Haley and Juan, for having me today. Thank you.
Awesome, Shenoah. Thank you so much for joining us. I always love your market updates. I love the numbers, the figures. It's so great to hear the just whatever is updated each month. Guys, be sure to check out that website, texasstarterkit.com/quest. The relationship between Phil and Shenoah and their Texas RIAs and Quest has been around for longer than I've been with Quest, which is at least 5 years. So they've got a lot of great resources. They've got one of the strongest networks that I'm personally aware of in Texas. And we've seen a lot of people that work with y'all's group really gain a lot of success in real estate, both from the knowledge and the network as well. So if you guys are looking to take yourself to the next level, I would definitely recommend check out those resources that they have. They're really great for you. But that being said, be sure to check out our other events this week. Shenoah, I think that is all the questions that we have, and almost all the time that we have for today as well. So thank you so much for taking time out to join us. Stay as warm as possible this weekend. I know we're about to go wrap our pipes here in Houston this weekend. So y'all stay safe out there.
Crazy times. All right. Well, thank you guys so much. Have a wonderful, wonderful day, wonderful weekend. We'll talk to you soon. Take care. Bye.
So bye, everyone. Y'all have a great day.